Good morning. UBS is very pleased to be a sponsor of this conference. It's a great conference. All the clients and prospective clients from both NOCs, IOCs and other oil and gas companies are here, so that's why we think it's worthwhile and important to be here. My presentation today is about the growing importance of creating cross-border partnerships in the global oil and gas industry. So it's a theme that we've heard an awful lot about this morning from various speakers, but this is from the perspective of a financial and strategic advisor, so it may be a little bit different. Firstly, my apologies for this obligatory legal disclaimer. Lawyers seem to get very involved in everything these days, especially presentations. My agenda for the next 20 minutes is to give you a short introduction to UBS, just say, and how we work with the industry, look at the world's largest NOCs and their respective growth strategies. How do we measure their success, especially in real partnerships? And finally, look at which IOCs have collaborated most successfully with the key NOCs. I'm going to start with a video, I think. This is it's ticking, so there's a video coming. That talks about a little bit about UBS at a very high level. It's only about 30 seconds. Very soothing, very inspirational. I liked that video. I think it's inspirational. It's all about ambition. It's about collaboration and success. And in that respect, we all have ambition. The IOCs, the NOCs have ambition. And to achieve the success, I think collaboration is critical. There are three areas of UBS. There's wealth management, asset management, and investment banking. I represent the investment bank and specifically the global oil and gas team. There are 70 of us across the world who just focus on oil and gas. Some of us are technical, some of us are non-technical, but we just work with the oil and gas industry. And these 70 people, there's some contact details at the end, are the people that will not rest, that want to help you succeed and achieve your ambitions. It sounds exhausting, this "we will not rest," but I think the fact that we work in such an interesting industry, it's genuinely interesting. Just a couple of pages on some of the transactions where we have been involved, both strategic and financing. Last year we advised Sinochem, the smallest of the four Chinese oil companies, on their biggest yet $3 billion acquisition, which was a true joint venture with Statoil in the Peregrino field offshore Brazil. We also advised Reliance on a $3 billion joint venture with Pioneer Natural Resources in the Eagle Ford Shale, so another cross-border partnership. And then earlier this year, we advised PetroChina when they concluded their first investment in Europe in the downstream, where it was a $2 billion refining and, importantly, trading joint venture with INEOS. Similarly, two I'd like to highlight on this page. Last month, we advised Repsol on selling a further 10% of YPF in Argentina to its partner, Grupo Peterson. Also in Latin America, an ongoing transaction where UBS is advising Galp Energia, the Portuguese national oil company, on the potential divestment of a minority stake in its very successful Brazil business called Petrogal Brazil, which will likely be achieved via the creation of a strategic partnership and joint venture. So moving on to the substance, enough of the advertisements. Who are the top 10 producing NOCs? If you put it in oil and gas terms and use oil and oil equivalents, Russia's Gazprom is actually the largest producer, but most of that is gas, which obviously has a lower value than oil. And then, as we all know, Saudi Aramco, in terms of oil, is head and shoulders above the other oil producers, followed by NIOC, Kuwait, the Nigerians, the Iraqis, and Abu Dhabis. Interestingly, Iraq doesn't actually have a national oil company, but I think is an increasingly important producer and partner for many of the IOCs and NOCs, and I'll touch upon that later. And then towards the tail of this bar chart, I think there are some of the fastest growing NOCs that will be moving up, which is Petrobras, Rosneft, and QP. I mean, they all are growing and for different reasons, but they're all, I'd say, some of the fastest moving IOCs. If we look at the other side, I've done this looking at which countries are the greatest net importers of oil and gas. The single biggest importer is Japan. Interestingly, there is no official NOC in Japan. The big one that's growing, or the biggest in oil that's growing very fast, of course, is China. China has four very large, I'd say the top three, PetroChina, Sinopec, and Sinopec are very large, and Sinopec is large relatively. They're all becoming increasingly well known, and their ambitions cross every segment, whether it's upstream, midstream, downstream, even oil field services. Next are the Koreans, who are relatively new names on the international stage, but we do see KNOC appearing even in the North Sea. Then come the Indians, there are numerous state-owned enterprises in India. The biggest is ONGC, and then finally the fifth largest net importer is Thailand. And again, PTT, or Thailand, while a modest net importer, PTT is increasingly active on the international stage in making acquisitions, forging partnerships. So what are their growth strategies? There's clearly a big imbalance, as you saw on the last two slides, between the people who have the oil and the people that consume the oil. And that imbalance drives people's strategies, and those differences create the opportunity for strategic joint ventures. Mostly, all NOCs, whether they're producing or consuming NOCs, are focused on the upstream, whether they have a lot or a little. And they all want to apply technologies to the difficult resources we've heard a lot about. It's not easy, it's getting more difficult. And I think applying technology is as relevant in the Middle East and right across the Americas as it is in Asia Pacific. Accessing the upstream resource is absolutely key for the net importers, but then looking at the downstream, I think the PetroChinas of this world, the producing NOCs, are all interested in domestic and international refining and marketing. And again, access to market here is important, and the technology is key. And as Andy said in his presentation, the oil price is volatile, oil demand can be volatile, and that's why producing NOCs continue to want direct access to the downstream. So it's not all about upstream, but it's mostly about upstream. So what are the required elements for success? UBS sponsors Formula One, but my lawyers wouldn't allow me to use a proper Formula One, so I've used a cheap imitation, despite spending tens of millions on the sponsorship. I think there are four elements, which I think is similar to what others have said. I think, first of all, you need access, whether it's like the racetrack. You've got to find the opportunity and access it, whether it's the upstream or the downstream. Secondly, you need the technology to unlock that opportunity, which is kind of the car and the fuel. Thirdly, this is extremely capital intensive. There are projects it's not unheard of that there are upstream and downstream projects that on a standalone basis are $10, $20 billion and even more. And fourthly, you need someone to execute it, to bring it all together. That's sort of the driver and the support team, if you take the analogy with Formula One. So all these elements need to come together. It's very rare that one NOC or one IOC or one company has all four elements, and also if the project is $10, $20 billion, wants to risk all that money in a single venture. So that's why I think the oil industry is a team sport like Formula One. It's all about collaboration amongst multiple partners to ensure success. And the other thing that glues all that together is trust, which has been mentioned several times. A splash of colour here. If we look at the four main Middle Eastern NOCs, I think Saudi Aramco and ADNOC have the most advanced and broad portfolio of JVs, particularly in the refining and petrochemical area. Saudi Aramco has multiple JVs, but domestically and internationally, with Shell and also Sinopec. The Abu Dhabis have several partnerships, including Total and BP. I think the Abu Dhabis are relatively open, having Shell, Total, BP, Conoco, actual active partners in Abu Dhabi, whereas Saudi Aramco and Saudi Arabia, generally speaking, has only invited IOCs into the gas. Looking at Kuwait, they've recently established some international refining JVs in China, Indonesia, and Italy. They've not made too many JVs domestically in downstream or upstream, although there are some technical arrangements in place. But in terms of an oil company able to actually invest capital into equity, that's not possible in Kuwait. And then finally, the Qataris, who are the relatively new kids on the block over the last decade, so sort of the most nascent of the Middle Eastern NOCs. I think they've been one of the most active collaborators with multiple IOCs. I mean, Qatar Gas, with Exxon, Shell, Total, and Conoco, has spurred their growth and allowed Qatar Petroleum to achieve an annual LNG production of 42 million tonnes per annum, which is huge. Similarly, the recently on-stream gas to liquids project, the Pearl project with Shell, is a massive example of collaboration, bringing together the access, the technology, the capital, and the sort of execution capabilities that Shell have brought there. It's cost nearly $20 billion, groundbreaking technology, and sort of 5 years to build and many more years before that to create the plan. I think the Qatar has also actually been relatively open in the upstream. They have Maersk in the oil, and obviously in the gas, the same partners that are in Qatar Gas. Looking at the other side, that we're hearing more and more of the NOCs from China. Just recently, PetroChina started to create joint ventures across all aspects: the downstream in refining and trading, as I mentioned with INEOS, as well as the upstream where they're in Iraq with BP, as Bob Dudley mentioned, which is they're going to produce close to 3 million barrels by 2016. They're an exploration joint venture in Qatar with QP and Shell, and an alliance was announced yesterday with Shell. Sinopec, they partner in one particular example in Fujian with the largest producing NOC, Saudi Aramco, and the largest IOC, ExxonMobil, which is a great three-way partnership. And then more recently, Sinopec, which was traditionally more on the downstream, they have huge ambitions in upstream, where they've invested $7 billion just recently in Repsol Brazil, which puts a lot of money in play in the Santos Basin, which is a huge province and huge opportunity. In terms of Sinopec, it's got domestic partnerships in petrochemicals and gas and LNG receiving terminals. Last year, they struck a very important partnership with BG in Australia and Queensland. And then earlier this year, when Sinopec and Total joined Tullow Oil in Lake Albert in Uganda, I think that's a really interesting three-way partnership where you've got everyone brings different industrial elements, and they all bring capital, and it's very much a geopolitical alliance. As Aidan Heavey would say, Total brings certain protections and expertise, and the Chinese bring certain protections and expertise, and it's that, I'd say, almost political and industrial alliance. Sinochem is the much smaller, but we recently helped Sinochem buy into the Peregrino field, where they beat competition from various other Asian NOCs from China and beyond. Very quickly, looking at the other Asian NOCs, KNOC from Korea has made some outright acquisitions, such as Dana in the UK. That actually got it into a very small JV with Chevron, but not in a heavy oil field, but that was more an indirect consequence. And then they've partnered more recently with Anadarko in the shale, the gas shale in the US. So they all want to learn and they want to secure those resources. ONGC, it's purely an upstream company. They've got various joint ventures and partnerships with Statoil, PDVSA and Kazmunai Gas. And then PTT, the fifth of these countries, Thailand, they've had for a long time refining and chemicals joint ventures in country, but more recently they forged a significant strategic joint venture with Statoil in the Canadian oil sands. So they're going further afield and they're putting more billions of dollars to work and being more adventurous where they go. Next sort of part of the agenda is which IOCs have collaborated most successfully with the NOCs, and I call these selected key relationships. I've tried to put the partnerships than the relationships. If you put every relationship on, it would be even more colourful. But mostly it's situations where they've actually got equity together rather than a PSC doesn't sort of count. ExxonMobil have partnered extremely broadly with Qatar, with QP in Qatar. I think Chevron, one of their more distinctive JVs is not with an NOC, but the Saudi Ministry of Petroleum, where they've got an extra 30 years on their license in the partition neutral zone. So that sort of technically gets them into Kuwait and Saudi. And Jay mentioned the Wafra development, which is very technical, very groundbreaking, and that's one of the attractions, or was one of the attractions to the Saudis to extend that contract to Chevron. Shell has, as I mentioned, partnered very broadly and for a long time with Saudi Aramco, but it's also got good relationships and partnerships with ADNOC, with the Omanis, and elsewhere with the likes of Gazprom. BP would like to do more in Oman, as we heard from Bob Dudley. Their biggest JV is the PetroChina JV in Iraq. They're very big with ADNOC, with Sinuk in Indonesia, as Bob also mentioned, and also with Sinuk in Argentina. Plus they have multiple petrochemicals JVs with various Asian NOCs. And then finally, Total, at the bottom there, is partnered significantly with QP, ADNOC, and then the Saudis in the new refinery that's coming on. So they've been more adventurous, putting more money in downstream as well as upstream, and more recently partnered with Sinuk and Tullow, as I mentioned. Very simplistically, and you probably can't see this at the back, who's created the most value? Clearly, many of the Asian NOCs are listed. Some of the Latin American NOCs are listed, and all IOCs are listed. The Middle Eastern NOCs are not listed, but the sort of laggard is the European IOCs. Over the last 6.5 years, they've been outperformed by the US IOCs. And then the next best performance at 200% return over the last 6.5 years is the Latin American NOCs, which I'm sure is dominated by Petrobras. And then at the top, the Asian NOCs have gone up 250% over that period. Very simplistic, and there's lots of sort of noise within that. But it seems to me that my conclusion is the NOCs have actually created more value. So is there more value in the access, whether it's the access to the resource, as in the case of, say, Petrobras, who also have a lot of technology, and is there more value in the access to the market and the huge capital they have than in the IOCs? So I think the NOCs with superior access to resource and consumers have done well, and they've increasingly been active in cross-border partnerships. And then finally, I think those NOCs who have been good at partnering in the past, and those IOCs who've demonstrated that they're good partners and can collaborate successfully, they're the ones that are going to capture the value and secure the growth. Because I think without partnerships, none of these companies can grow. That's my conclusion. There's some contact details there. These are the people that will not rest. We'd like to, become your trusted advisor if we're not already. About 10 of us are in the room and at the conference, so please come and talk to us. But thank you very much for your attention.
Thank you, Philip Wolfe. If that's the UBS's idea of a car, I'm not sure I want to buy one. Is anybody else would like to take Philip up on the subject of joint ventures, partnerships? I just had one question I thought I would ask you. As an investment bank, one of the things I noticed from your slide, that there's a lot of joint ventures, there's a lot of partnerships, but not many acquisitions. And in your department, that's probably a big interested.
Well, we're involved in outright acquisitions and also creating joint ventures. But I think increasingly, no one really wants to sell anything, except the smaller mid-cap companies that have to be bought because they run out of capital, and someone bigger and better equipped comes and sort of gobbles them up, say KNOC buying Dana. But typically, the NOCs in certain parts of the world will not sell anything anyway, and they will partner, so 1 + 1 = 3, rather than sell the one for one and a bit. So I think increasingly partnerships are the way forward, whether it's two bidders after the same asset together. So there is lots of M&A too, but I think a lot of the M&A is done by partnerships, and we advise on both, and on capital raising as well.
Okay. Well, thank you very much, Philip.